Okay, let's turn now to today's business news. Stephen Carroll joins us for that. Stephen, you've been looking at the details of this submarine deal with a French company that was cancelled now by the French government, or by the Australian government.
By the Australian government, that's right. The deal signed in 2016 for 12 submarines from the shipbuilder Naval. The price tag was originally 50 billion Australian dollars, around 34 billion euros, but that had since risen significantly over the past 5 years. Naval says that Canberra's move is a major disappointment. France's Foreign Minister Jean-Yves Le Drian has described it as a knife in the back from Australia. Yuka Royer has the details.
The biggest defence contract in Australian history goes under.
We will not be continuing with the attack class submarine program and have advised Naval Group and of course the government of France and President Macron of that decision.
Canberra unilaterally terminated the deal with France's Naval Group to instead build nuclear-powered submarines using technology provided by the United States and Britain. Signed in 2016, the deal with Naval was designed to replace Australia's 2-decade-old fleet of submarines with 12 attack-class French vessels over 50 years.
We're currently laying the first stone, the first pillar of a construct that will survive us for decades to come in the service of our security, of our partnership.
Since then, the project has become a poisoned chalice for successive Australian governments, plagued by potential delays, cost blowouts and disputes over local industry involvement. Initially estimated at 50 billion Australian dollars, the figure had risen to close to 90 billion. The French shipbuilder committed to spend at least 60% of the contract value within Australia to create hundreds of jobs. In a statement, the company said it was assessing the consequences of Canberra's move. According to a leaked, detailed contract signed 2 years ago, Naval would receive a break payment of 90 million euros if it completed the basic design, and 250 million euros after a more detailed design was provided. The first of the French-designed submarines was not expected to be delivered until the 2030s.
We've been keeping an eye on stock market reaction to that story here in Europe as trading has gotten underway. Naval isn't listed on the stock exchange, but the defence giant Thales has a 35% stake in the company. Its shares actually starting the day up 1% in Paris. Despite that news from Australia, the company saying before markets had begun trading that its financial objectives were unchanged by this decision. So interesting to watch how those companies are being affected. More generally, European markets, as you can see, they're trading up across London, Paris and Frankfurt.
Meanwhile, Stephen, stock markets in Asia hit by major problems at one of China's biggest property developers.
Shares in Evergrande tumbling again today in Hong Kong. They're down around 8% a short time ago. This is dragging down the whole Hong Kong stock market. Investors fearing that financial problems at this company could spill over into the wider Chinese economy. You can see the picture there on the Asian markets. The Evergrande Group is experiencing a cash crisis and struggling to avoid defaulting on billions of euros worth of debt. Hundreds of shareholders have protested against the company's Shenzhen headquarters, demanding money that they invested be returned to them. Evergrande has already warned it will struggle to meet some of its payments and has suspended trading in some bonds in China. The company could be facing a messy collapse, but market analysts believe the Chinese government would step in before that happens.
I do believe there's always a plan from the China government. They want to teach Evergrande or other developers a lesson that, if you don't listen or if you are overexpanding, then you might pay a price for that.
And finally from you, Stephen, a better day on the stock markets though for a company backed by tennis star Roger Federer.
The Swiss player is an investor in the shoe company On Holding, which was founded back in 2010. He signed up earlier this year to develop the Roger Pro tennis shoe. On Holding launched its shares on the New York Stock Exchange on Wednesday. They had a very good first day, jumping by 46%. Investors may also have been attracted by the company's sustainable shoe line, which includes the Cyclone model that's made from castor beans.
Oh, interesting. I actually know that runner brand. There you go. I didn't expect to. Stephen Carroll, thanks a lot for that business update.